Hey guys, had a few people uh, direct message me and ask me if I'd make some videos on technical analysis. And thinking about it, probably make a lot of sense to put up a chart and talk to it versus texting or writing a paragraph and trying to explain how to trade that stock ticker. So before I get started, I kind of wanted to give you an introduction to myself and discuss my philosophy on trading. So first off, I'm not a financial advisor. I don't work for Wall Street, and I don't have any background in economics and or trading stocks. I've been self-taught for the last 5 years, and like many others, I pretty much failed at trading stocks for about the first year, and then started to develop a strategy to become successful. So I went from one of the 95% that failed in trading, that lost a lot of capital, to someone that has had great returns in the past year. I currently have two accounts. One is on TD Ameritrade, and the other one is still on Robinhood. My Robinhood account has grossed 186% this year. It's upwards of a few 100% in the last 3 months, and then my larger account, TD Ameritrade, is about 80% respectively. For comparison, my 401k that's managed by my previous company by a bunch of professionals is up 9% year to date. A little bit about my trading philosophy is I primarily trade stocks by direct purchase. I will trade on occasion options if I'm really confident in the trade. About 1/3 of my capital is devoted to cryptocurrency currently. Um, it does swing a lot, so my capital does change in that account for crypto on a week-to-week basis. I am primarily a technical trader that primarily uses moving averages. I don't look at financials. I don't look a lot at the news other than for catalyst to really make a moving average divergence play. So before I get started here, what is technical trading for those that are just kind of new to trading in general? Technical analysis is an analysis methodology forecasting the direction of prices through past market data, primarily price and volume. So this is lagging information that is trying to predict the future. Examples of technical trading are moving averages, which I'll use quite a bit, Bollinger Band, squeeze indicators, VWAP, so on and so forth. There's probably over 100 um, technical tools you can use in TD Ameritrade or Fidelity or the other big brokers. My go-to strategy is utilizing the 920 moving average. It works great on the daily chart, but also can break down a 5-minute chart with great success. So here's my small account. The past 3 months, it's up 494%, and on the year, it's up 182%. Um, this year has been a challenge due to some of the stimulus packages, the election, and so on. So you're going to see some spikes and dips there on the year. Um, with the one spike in particular that I learned a lot right here was on June 6th. One of the stimulus packages approval, we saw a huge move in the stock market followed by a big dip and then a sell-off that lasted a few months. This other dip here, just if you're wondering, is my account was primarily options, and that was in the October timeframe when the stock market was consolidating before the run-up into the elections. So a little bit about organizing a strategy. I use technical analysis basically to identify the trend, the support, and resistance in a matter of minutes. The chart on the left is actually QS. I've talked about it quite a bit here recently. To me, that chart looks like a bunch of green and red candles. Looks a little bit like chaos. I don't know what to do with it yet. On the right, you're going to see basically how I chart every stock that I look at, and that is through the moving averages and a few of the indicators at the bottom, which are the TTM squeeze, RSI, and MACD. And as you can see, all of a sudden those candles start looking like they're respecting certain lines, which can add data to our decision how we make that trade. So this is a very typical technical analysis chart for me. Once again, this is QA. It's a little bit bigger so we can see it. I use the 9, 20, and the 50 moving average every single day. The green line is the 9-day exponential moving average, which basically weights those last few candles a little bit more heavier to be more reactive compared to the simple moving average. I do keep the red, the 20-day average, as a simple moving average, and the peach as the 50-day simple moving average. So down low, you're going to see the TTM squeeze, which is the light blue, dark blue, red to yellow fade there right now. I do use RSI. I use that primarily for exit points. Stocks tend to not hold well over that 70 mark. And then I use MACD for divergence. That upward divergence is typically what I'm looking for an entry, and my exits would be that downward divergence when the stock begins to sell off. Hopefully, we have taken profit by that point because there's usually some pretty good consolidation by the time that MACD does diverge. So a little bit about risk versus reward. This is really up to you guys to develop your strategy and what you're comfortable with. Trade size varies from trader to trader. Some are willing to trade up to 25% of their portfolio, but even sometimes they all go all in. The benefits of that is also bigger returns, right? The downside is bigger losses as well. Um, Very structural traders will trade as little as 1% of their capital, so they're risking very little of their portfolio. Others will trade on margin, others avoid it at all cost. My personal strategy varies here quite a bit. I try not to go much more than probably 10% of my overall portfolio in a single stock. If I have a lot of confidence in it, I might go up a little bit. I do use margin on occasion. Sometimes it's buying a dip that I have a lot of confidence in, or even selling an option to cover a trade. A little bit about risk here. When you're looking at your future trades, and really something I'm going to focus on if you guys stay here in this chat room, is it would you take a trade that provides a $1 upside but has a downside of $5 of support? You guys are like, well, how would I know that? Well, as we go through this technical analysis and you start seeing these moving averages, we'll start reading these candles to see what we realistically think this ticker can move up or down based on those moving averages. Um, if we start taking these trades that have higher risk, what we'll often find is we'll have some success, um, but it'll have a lot of volatility in your portfolio because of the downside and upside. So we're really looking for some clean and consistent trading to grow our portfolios. Me personally, I prefer a series of base hits versus home runs. I prefer growing my portfolio consistently without huge swings in either direction. I love huge swings in the upward direction, of course, but usually that comes with a lot of risk. So for you baseball fans out there, I think Derek Jeter versus Babe Ruth both obviously hit a lot of home runs, but Derek Jeter also hit a lot of more base hits than Babe Ruth, where Babe Ruth might strike out a lot. And that is our goal, to not do that. We do not want to wreck our portfolio and our capital. So here's just some really simple rules of trading that I have learned over the past 5 years. It's a definite do. Find your personal strategy through research. I'm obviously putting this channel together to teach you guys about technical trading. I hope you guys find a lot of value in it. Others won't find value in this. They prefer looking at financials. They prefer holding long. They have a lot of different strategies. So don't just take mine. I think it's going to work for you. Really do some personal research and develop what is going to work for best for you. Don't blindly assume someone's strategy will work for you. Like I said, everyone's mind works a little bit different. Their psychology, their behavior. Really find something that works great for you guys. Utilize extra money that you don't depend on. So obviously, whenever you guys are using your capital, you don't want to use something that's going to pay next month's rent, next month's car payment. You guys want to really focus on something that is literally extra, that you could lose all and not have a lot of guilt, not a lot of pressure to continue to pay your bills. Do not gamble your bill money. Do not get a loan. Identify the positive trends. So it goes without saying that if you follow the trend, you should have more success. You have some people that like to dip buy. It is a strategy and it does have success at times, but you are literally going against the trend. The opposite of that would be do not get into a FOMO situation. So we can talk a little bit about that. You can talk about GME, you can talk about BlackBerry. If you got in early, you made a lot of money. If you got in late, you literally wreck your accounts. So I really recommend do not get in those FOMO situations where a stock is up 30, 50, 70, 80%, and there's a lot of hype that's going to continue to climb. There's a lot of risk there. The stock has now moved really far away from the moving averages, and if you think of a moving average like a magnet, eventually it's going to come back down. We just don't know when. So continue to learn. The big thing here is there's a lot of strategies. The market continues to adapt. New things enter the market through stimulus, elections, or different policies. One of the big one here recently has been the introduction of Biden's green energy plan. So we've seen a huge move in EV. We've also seen a big move in cannabis stocks. Um, the market changes, adjust as necessary. Even if you have a strategy that you have found a lot of success in, don't think it'll continue to work just because it's worked in the past. You might have to adapt a little bit. The biggest do that still I struggle with at times is to take profits. What is your goal going to the trade? Is it 5%? Is it 10%? Is it 30%? Typically, what happens here is you'll have a really big move, and all of a sudden you think it's that home run, and it's gone up 20%, and you think it's going to move to 50 or 100. So we continue to stay in that trade a little bit longer than we want to. We wake up the next day and it's already consolidated down 10%, and we find ourselves holding or hodling, as a lot of people say. Um, and basically, that stock continues to consolidate down to the moving average, and we missed a lot of profit when we could have re-entered that trade at a later time. The opposite of that is make sure you know what your stop loss is. There is no reason to stay in a trade that has a 10, a 20, a 30, a 40, 50% loss. It's much better to take that 5% loss and move on and find a stock that's really going to make you guys some money. It's not hard to make up 5%, but it's very hard to make up 20 and 30 and 40%. What that does is it really weighs on your conscious and the psychology of your trade, and it tends to make your risk basis go up as you try to make up those funds. So I know this was short. I just kind of wanted to give you an introduction to kind of where I was as a trader. I've been doing it for 5 years, found a lot of success in the last few years. Really wanting to take my portfolio and grow it exponentially, of course. My key thing here is being clear and consistent with my trades, taking the gains when I can, cutting my losses, and moving on and continue to find those good moves. Hope I provide a lot of value to you guys. I hope you guys take some of these trades, and I really look forward to some of the feedback you guys can provide. Thanks.